Hey everybody, Dave Bartosiak here, and I've got another chart of the day. This time we're talking about Apple, ticker AAPL. Now, couple of things about Apple that I want to point out, right? And the first of which is, this big run up to the highs over 235, and then we have it sort of coming on down to that August 5th low. Now, if you remember, August 5th was the day where we woke up on Monday and the carried trade, the yen carry trade, blowing up in everybody's faces. So that yen carry trade is essentially people borrowing in Japanese yen at very low interest rates, converting that into US dollars, and then buying, in a lot of cases, buying equities. But in general, you're just buying higher yielding assets. So you can even just do it with bonds, right? That's kind of the safer way, but we all know these hedge funds like to lever up. So when that blew up, this is what we got, right? This big gap down. Now, Apple didn't recover back to those highs. It got to about 232. And while the rest of the broad market is sort of pushing up higher, Apple's kind of retreating a little bit. So you've got a little bit of divergence between Apple and the broad market, right? And I know tech has been under a little bit more pressure, but the point is we've had this recent gap down, and this happened on Monday the 16th. Gap down on earnings, or not on earnings, but just news, right? They're just saying their iPhone 16 sales look a little weaker than last year's model, or at least the pre-orders, and then it's coming under pressure. Are we starting to get into one of these cycles with Apple where maybe now it's a really mature, older sort of tech company, and they're, I don't want to say missing the boat on AI, but they're certainly not leading the way in AI, and we're seeing it sort of struggle a little bit? Technical aspects of the chart, you've got your golden cross here in June. This 50-day really coming into play. The gap down underneath it, and then like a magnet, we're drawn to it, overshoot it, can't get to the highs, drawn back to it, but now we get this gap down from it. I don't like that. Gaps do get filled, and granted, we have FOMC tomorrow, so a lot can change with the broad market, but overall here, not the biggest fan of seeing the gap down below that 50-day. Now, like I said before, this 50-day tends to attract the price of Apple. If we zoom out, kind of look back, you'll see it spends plenty of time meandering about that 50-day. And granted, the 200-day, a lot more, but look at sort of the support it provided, right? It's like the slope of the 50-day was basically the slope of Apple. You had a nice little gap, little cushion between it and the 50-day, and then you get a gap down to it. Failure, run back up, failure, right? So that was the situation earlier, rather in 2023. So now when I see this, and I see the gap down below it, get back to it, got a little cushion, boom, now we're on it again. I guess I'd be looking for another retest of the 50-day, and then a lot is going to depend on how the stock behaves there, right? Because we get a failure there, that leads to further downside and a retest of the 200. And I'm drawing this out because it's just sort of taking the natural flow of what this 50-day has done in the past. So when it starts to roll over, sort of implies it might continue to roll over, and this 200-day likely to sort of continue along this path. So I would venture a guess that 200 level, should things roll over a little bit more for Apple, is where we go. Now, again, FOMC is coming. So if we get a big boost on the NASDAQ, that's obviously going to help Apple along, right? So this is sort of I guess I'd say 25% possibility or probability if we're looking at these things of sort of a retest to the downside of this, especially if money starts to rotate out of tech and into other names, which we've talked ad nauseum about the money rolling out of tech and maybe into the small caps, because the small caps sort of needs to play catch up. And we're not really sure that that's going to take place, right? But I give it 25% probability we get a little something like that. On the other side of the equation, we could just get a sort of broad market rally to get the Apple back up to the highs. So these are some of the things that we're looking at right now as potential. So that's why I think that Apple is maybe you have to sort of reassess it and take a look at it in the grand scheme of things. Is this the same stock that it was with the innovation moving forward, or are things starting to get a little long in the tooth for the stock, and are we going to roll over? Something that you got to assess, and our Zacks rank helps you do that. So currently it's a Zacks rank number 3 hold, because estimates are kind of going sideways right now for the company. All right, folks, so that's my chart of the day here today. Be sure to follow the author, subscribe to the YouTube channel, and come back tomorrow for my next video, my next chart of the day, which I already know is going to be on Intel. So for everybody here at Zacks.com, I'm Dave Bartosiak, and I'll see you tomorrow.